Oil consistent as marketplace weighs tight supply in opposition to recession fears. Singapore oil expenses were steady to higher in Asia change on Friday, lifted by way of supply concerns as interest turns to the next meeting among OPEC and its allies, even though fears of recession capped profits. U.S. West Texas Intermediate (WTI) crude futures for September transport rose 38 cents, or 0.4%, to $96.80 a barrel through 0330 GMT, reversing losses from the previous consultation and on track for almost 3% rise for the week. Brent crude futures for September agreement, because of expire on Friday, have been flat at $107.14 a barrel. The more lively October agreement climbed 8 cents, or 0.1%, to $101.91. It really appears like we are again in trade-off mode again, where sentiment is shifting between recessionary dangers in H2 and a essentially undersupplied marketplace, stated Stephen Innes, dealing with accomplice at SPI Asset Management. A key driver will be the subsequent meeting of the Organization of the Petroleum Exporting Countries (OPEC) and allies led by way of Russia, collectively called OPEC+, on August 3. Producers have now unwound the document 9.7 million barrels in line with day (BPD) supply reduce they agreed in April 2020, whilst the COVID-19 pandemic slammed call for. Oil costs have little risk of posting deep losses at the return of a weak U.S. dollar and the continuing deliver crunch, stated CMC Markets analyst Tina Teng. OPEC Plus sources mentioned the organization will keep in mind preserving oil output unchanged for September, but two OPEC Plus sources also advised a modest boom would be mentioned. A decision no longer to elevate output would disappoint the U.S. after U.S. President Joe Biden visited Saudi Arabia this month hoping to strike a deal on oil production. A senior U.S. management reliable mentioned on Thursday the authorities became positive about the OPEC Plus assembly, and mentioned greater deliver could assist stabilize the market. Analysts, but, said it would be tough for OPEC Plus to boost deliver plenty for the reason that many manufacturers are suffering to meet their production quotas because of a loss of investment in oil fields. OPEC manufacturing is constrained, although substances are stabilizing in Libya and Ecuador. Underinvestment in lots of member countries will preserve manufacturing limited, ANZ research analysts said.